fund, and definitely that fund would perform better. Or the fund which he said that don't invest anymore, but stay. That's I'm talking about my own distributor, that would happen. Now, what happens is that when you are running an organized setup, like a magazine, a website, or anything, so it is imperative that you write very regular articles. It is very important that we have different products. So that's why now they have, earlier they only had one magazine. There was no premium subscription for the website. Then they came with premium subscription. Then recently they started this service of advising on different funds and advising the portfolio. They have to, because for them it's a commercial interest. So far, I have seen that Mr. Hirendra, he was very astute in his statements and very honest in his opinions. And but of late, I have been finding that his statements are very jerky. They are not very coherent. And it is quite all right because earlier he was the one man who was managing his magazine and website. So whatever he wanted was happening. But now because the style has grown and people have to be paid, so naturally he has to listen to his business development manager and other people. So we should take from the style what is required, and that is the data. Some articles, but the advice, if at all, should largely be your own. Right.
Also, like few funds, like 5-star rated funds, it is showing me to sell. So, as per your guidance,
He will show it 5-star also, and he will say he will not put it in the best buy category. A lot of times it is happening like that.
not just best buy, it is suggesting to sell.
Yeah. And then can be a lot of conflicting interests. I cannot comment on that because I really admire the gentleman a lot, and he has done a lot for this country. He is the only person who has actually brought the mutual fund to the level that it is today. He was the man who used to go to earlier office and calculate the NAV. I'm talking about 1995, 94, when the Indian mutual fund industry was still not privatized and no product had come forward. So things have happened, but my point largely is that now again one more point. Like we have been pursuing it, we have been discussing with other people before most joined, and we were on WhatsApp. This came to WhatsApp. We used to say index fund, like we said, we should start investing in index fund, but on a trial basis. So that, when time comes, we are ready for it. But all the while, value research was of the opinion that index funds are far off and this will not happen. It's another 10 years before this can happen. There was a famous fund manager also who is no longer with HDFC fund, who was also against this and said that index fund are basically doing well because of the PF money coming into the index fund. But as we have seen, large cap is easily being surpassed by the index funds. And we are talking, when we talk large cap, we always talk about Nifty and next junior Nifty or the next Nifty. So we have seen that now, by experience, and because a lot of things, we have to learn by experience. Your previous data does not always prove anything. And more or less, moreover than anything else, we do not have all the data available to us also to take the call at the same time when a fund is launched. So in case of an active fund, we have to watch for years to see that will it perform, is it stable. But with the index fund, there are other things that we need to look at. And still, we should not really run for the index funds immediately when the NFO is launched. All the same, we have seen that there are so many kind of index funds which are there in the market. And earlier, there was a theory that I was putting to myself that a fund, when it comes to the Nifty 50, it has already been there in the junior Nifty for some time. And when it has performed very well and it has run up, then its value becomes high, the capitalization or the cap becomes so high that it goes into the Nifty, main Nifty. That means that it has already given its fruits in the next Nifty category or the junior Nifty category, which brought us to the fact that we should also buy junior Nifty or the next Nifty. Now the same thing could be said of the mid cap also, that when the mid cap does well, it goes into the junior Nifty and then it goes to the main Nifty. That means we should also buy the junior Nifty. Same thing can be said of 250 stocks of small cap also. That also we can say that when they do well, Only then they make themselves into the mid cap category, and when the mid cap category are stock does well, it goes into the next Nifty. Now it all brings down to the basic thing then, that apart from the allocation of each particular stock to the Nifty, we might as well buy Nifty 500 and finish off with all the problems. So these are simplistic solutions, good to think, but we cannot be found on the wrong side of any concept. We are not experts here, we are not economists here. We are simple mariners, and we have to first save money and then we have to invest that money and invest in a way that we don't make maybe the best returns, but we also don't make the worst returns. Because we have already seen that it is the time which will make all the difference in the market. In the market means the amount of time that we hold. So from that point of view, I don't see many new joiners who are on the meeting today, but I had told them to come and join just so that we could talk from their point of view. So because most of you are already quite far on the path of investment and planning for yourself, and you have seen how the market moves up and moves down. Maybe a few of you have not seen it moving down, except the election day and 1 or 2 days of the last first week of August. Somebody is asking somewhere. Please confirm recording of the meeting. I don't know if anybody of you will be recording this meeting because there is Captain Rahul Sharma who wants to see it on YouTube. So I'll reply to him that we'll try. So anyway, so I would like to go back to one simple statement that the flavors of the seasons may keep on changing. And I'm not even saying that index funds or the ETFs are the final goal, what we will see. There may be some other products which will come later on. There may be a combined product for ETFs, maybe a fund of fund which will come little later on. One exists already, in which it may become simpler to invest in one go. But a similar fund, out of a little observation that I saw in the market and I have shared with you, was Grow Total Market Index, which actually covers about 766 stocks. But that does not mean that we start investing completely in that. Some of you have said that earlier I used to say that you invest in one large cap, in mid cap and small cap. And then I changed my stance to say that you invest in flexi cap and a small cap. And then I say that you keep one active fund and one passive fund. So you see, all these things, they come in as we evolve, as we get data, as we get established in the market, and we observe that this is also the way in which things can be easier for us and we don't have to track them, and they are more or less leading in the same direction, and the goal is 1 or 2% here and there. So that is what we must appreciate, because unless we do that, we will not start taking new measures, we will not start learning, or we will not start trying out new things. New things we have to try once you have your OCR mission completed or 2CR mission completed. Certainly you are free to invest in different kind of, I will not even say they don't invest in the sector funds. If you are confident, you can do it. Why not? But so far, except for IT, I have not seen any sector outperforming its counterpart stocks in the diversified fund. So that is how we keep taking decisions and we keep discussing. We are a very democratic channel here, and I let all of you put in your views, and then I also like to discuss it with you. Sometimes I do it on a personal one-to-one basis, saying that where do you get this data from? Why do you think this? Because at the end of the day, everybody, all of you will keep maturing, and I will keep deteriorating. So unless I have myself open to discussion, new ideas will not come up to me, and new ideas will not come up on the group either. So it is very important. Please think independently. I do not like to rest on my laurels. I do not like to believe what I have held till recent past, and because I don't want anything clouding my judgment. So from that point of view, please keep that in mind and always do your best in independent thinking. Don't stick by anybody's thing. And moving on, all that I wanted to say was that the biggest challenge, and you must understand this and help the new joiners who ask, these questions repeatedly on the group. The biggest challenge for you today is the KYC challenge, which not only the new joiners are facing, but even the old joiners are facing. Like my wife had to undergo one when her KYC was not re-verified after almost quarter of a century of investing. So you must, so when a new person comes in, you must inform him that firstly, it is not a good idea to use these apps because these apps somehow are taking shortcuts to get you on board. They like to have numbers, so they want you on board. They will somehow bypass the KYC requirements. Of course, now they are becoming stringent, and even by these apps, you cannot invest as a non-resident Indian. So you must understand and also explain to your juniors on your ships that when somebody wants to invest fresh, either they will have to take the trouble of going to the AMC or the two RTAs on his own for KYC and investment. Is it better? It is better if you are going to AMC to, in the first instance, to apply for investment. Any, whichever fund is closest to him, just apply in the flexi cap category or the value category or a mid cap category of that particular fund house. Doesn't matter which fund house, because that will enable him to clear his KYC. The KYC waivers will also be taken with him. Don't go to a fund house or RTA to do a KYC, because then they will say, okay, now your KYC will be done and this will happen. So you have to go maybe twice. Whereas if you just go and say, I want to invest in this particular fund house and in this scheme, they will take KYC as an additional form and they will fill up. And when the KYC is completed, in about a week, your first statement of account will be drawn, and then you can continue with this particular AMC online. Right? So that is the way. And if suppose they are not willing or they do not have the facility of going to the AMC office or the RTA, the next best thing is to go to the bank and do this in a regular fund basis. There is no harm absolutely in doing a regular, even though the commissions are or the expense ratio is 1% higher. It doesn't matter. Even if you completely expand your portfolio into 6 funds and all of them are in regular mode, and you have invested 1 lakh or 2 lakh or 10 lakhs in each of them, the outgoing commissions is not going to be debilitating because we are looking at a very long investing period. So in a span of maybe 6 months or 7 months, after your portfolio is set, simply create login ID of each of the funds on the websites using your laptop and start investing in a direct mode on the same folios. Only the method of investment will change. I hope I'm correct. All right, clear till now? So this is the way you should explain to your juniors on board or anybody asking this question online. Sometimes I also feel a little lethargic in replying to them now, repeating myself again and again. So you can keep some of the replies that have been made in the past as pinned, and you can forward it to these people directly also. Instead of putting it in the group, you just forward it directly to them. So that will be your service that you would be doing to the people, your own fraternity, and helping them start off. Second way you can help them is that seeing that where the person is, which city the person is, you ask them. And if this person is of your city, then call him over, give him a call, talk to him, show him your own portfolio, not necessarily the size of the portfolio, but you can discuss that this is what I have invested in. You can do in the same or you can apply in the fresh funds. So this will be another service to the fraternity and certainly a favor to me, so that we can move a little further. If every time we want to start from the same KYC business and end the 2-hour meeting at the KYC only, then we're not going to make much of a headway. So we have sufficient people now on the group. Let us discuss about the strategy of these debt funds. As you know that the debt funds are going to be becoming a little more important in the next few weeks, I would say, not a few months also. So it is important that we understand that where they can help us and how they can help us. Those of you who have read my book, it is very clear how I discuss about STP. I have also given a very subjective write-up without the help of Excel sheet, that why it is beneficial in the longer run to keep your money in debt funds, because it is easier for you to invest systematically and also switch in bulk than actually carrying out a transaction from the bank in form of a fresh purchase or a SIP. So now, as we have seen that we had agreed that we need to have one of the major investments in fixed deposits and in fixed income schemes or debt portion as NRE FD or FCNR, depending which you think would be helpful to you in future. If you are planning to shift abroad for higher study or taking up a sure job abroad, you think that's going to come, the money can be left in FCNR also, even if the rate of interest is low. Doesn't matter. If you think that I will not need it, but certainly the money in NRE is better than keeping it in any other avenue. It is better that you keep a NRE FD, and because now the rates are expected to go down by a quarter of a percent or to half a percent this particular year. In that case, certainly it makes more sense that you book your NRE FDs, whatever are maturing, for longest possible period, right? The same one. In this case, you should clarify with your bank that this will not cause the FDs to be liquidated and rebooked. They just need to be extended. This is something which the banks will never tell you. We had also agreed that what you need to have in your NRE FDs is probably maximum of 75 lakhs. I'm talking about the senior officers who are about to planning to give up your sailing in near future. This helps because it's easier to take care, and whenever you become a resident, the interest earned from these NRE FDs would probably lie within your income level, which will not attract tax. Otherwise, first the tax and second the inflation makes the FDs very unlucrative. I hope I'm clear, everybody. I'm quite audible, right?
Yes.
Okay, right. Thank you.
Yes,
Manish, you want to ask some question? You raise your hand. Hello, Manish.
yes. Actually, I have a question that last time you have told us that when you wanted to build a farmhouse, then you have withdrawn the money. Means you have shifted the money from equity to debt in a systematic manner. Means regularly you are withdrawing daily. You are withdrawing a
Daily,
amount of
daily.
money for 5 months, and then you have means so that you didn't want to face the means down phase of the equity which was looking possible to you in the near future. So means I just want to know that means how you means withdraw the money, means what should be the best way to withdraw the money when the equity market is high, then we should shift to the debt, and how should we should do that.
Yeah. So basically, the question is that when should you, and if at all, you should redeem your equity funds? The reply I have given a lot of times that you should not redeem your equity funds till you need the money, number one. And secondly, till you have exhausted all the other avenues. I liquidated my equity funds because if I had not done so and then I had paid off from my debt portfolio, then my asset allocation would have gone up higher in favor of equities, right? With the same amount I had withdrawn from the debt funds, which I had. Then definitely you sell the debt part, so the equity goes up. The equity portion goes up. So the asset allocation gets hassled. And it was quite a percentage, it would have brought down by almost 12-13%. So I took a middle route and I said that let's assume that the market goes up from here. So what is my risk analysis for myself? So it would have been a little more skewed against me had I left it in equity and waited for the times to ride out and withdrawn that after a few weeks. Suppose something would have happened in the elections. So I did not, because you people are still earning. You people are still earning. So you do not have that issue that where will that much money come from? I do have that issue. And I like to play a little safe. So I always like to maintain that asset allocation of equity and debt. So that is why I withdrew from equity, but that too also on a daily, regular basis instead of doing it on one day. And that itself boosted my returns, or rather cut down my losses by about 7% because I was doing it on daily basis. Then I put that money in good quality of debt fund. I put it in DSP floater fund, which has on an annual return basis, if I take a CAGR of last 6 months, is itself about 12%. So that was a bonus for me. Instead of getting a return of about 12%, instead of getting a return of about 12% on the small cap funds itself. Hi Saurabh, how are you? So instead of that, I am simply uh, shifted it to the debt. So I got returns on the debt, and because I moved slowly, I got good returns on the equity as well. If you are talking about taking out money for retirement, then we have already said that you only take out the amount that you need. But suppose you face this situation, which I am having at the age of 60, suppose you face this situation at 50 or 55, or even let's say 45, that you need 1 crore to send your children abroad for education, right? So obviously you want to go for education loan first, which one should, why not? Secondly, if you expect that this is going to happen, then it is always better to take that step of getting out of equity to keep your asset allocation correct at least 6 months in advance. I did not go 6 months, I only went about 2 to 3 months in advance. But you should do it at least 6 months in advance if you are not working, so that any turmoil in the market does not come in your way. Is that okay? Does it answer your question, or you want some other?
Yeah, but means does it mean that means whenever the market is at high, then we should shift it to the debt
No,
fund, or means
never, never, never,
we
never,
should
never.
when market is
No, 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 no,
low,
no,
we
no,
should
no,
not
no.
withdraw?
Asset allocation should not be tinkered by shifting from equity to debt or debt to equity. You people are still earning, right?
Yeah, yeah.
So as it is from the start, you should have more money in the equity. You can even afford not to have the asset allocation as what I keep as 75-25. You can have it more in favor of equity. You can keep it that way. But just to keep the asset allocation balanced, and shifting from equity to debt or debt to equity is not correct. Yes, you can. Tomorrow, suppose the equity market goes down, because debt market is not like equity market. It doesn't go down, stay down for 4, 5 months, 6 months, and then come up. No, here the fluctuations are more regularly, and they're very small fluctuations, not like equity market where things can happen 10% in 3 days. So in that case, certainly, because now suppose the market goes down by 10%, it is possible that your portfolio in equity allocation goes down by 13%. So as we have discussed before, and I'm sure you remember it, so we have said that when the market falls the first 5%, you can put a 10% money in that. When it falls next 10%, you can put 15% of the money in that, or 20% of the money from the debt into this format. Or the money that you earn from your next salary, you can put in this, because then you are helping to buy cheaper. Certainly. This way you can do. But to get out of the equity market, please don't try it. It is not advisable. Why? I'll tell you why this is a one-way road. Because you are planning for a long-term wealth. And this long-term does not mean retirement. It means much before that. 45 is a very critical age when most of us will have children going to college. Uh, Chief Engineer Saurabh, am I correct? Do you agree with me?
Correct,
Yes,
sir.
yes, sir, yes, sir.
I'm in this
That's a very, 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 very right age, And that also happens over the age when most people, are getting somehow saturated with their jobs. They also want to leave and do something. You see, most of you are thinking in terms of leaving by 45 to 50, right? So at this particular time, you will need to have your money sorted out, where to withdraw from. So in this situation, to reach that level, when you can do what you want at the age of 45, you should have money increasing at a faster pace. we have already seen that you can actually have a collect your 1 crore before reaching 30. And if you collect that 1 crore before reaching 30, by 33 you have 32 and a half, you have 2 crores or 33. That means another 2 years you will have 4 crores, right? So it moves like that. So do not dilute your idea, do not dilute your portfolio by switching to debt fund. That debt will be created, the allocation will be increased automatically when your next salary comes in, right? 1 year of earning is good enough to put your asset allocation in whichever form you want. So whenever there is a calamity, whenever there is a bad news, whenever there is a talk of bloodshed and everything, try to buy into the equity funds and select those very funds that you already are comfortable with, which you are already having in your portfolio. Maybe one or two which you have already shortlisted, you can keep that list in your mind and you can buy those also when this happens. But don't go on the swing of one day, because that may not last. You keep doing it. One day if it has fallen 3 and next day if it has fallen 2-3%, then certainly you can buy. The whole idea is to enhance your acceleration and accumulation stage of your wealth generation. So do not try to go down on equity anytime. Is that okay?
Yes, sir. Yes.
So we were saying that we already have selected that there are three kinds of funds which you can use for your STP. They are most, we will go to there are weeds at road, you can take any of these funds for your STP also. But because other funds like GILT is, I call it Government of India Letter of Treasury. I don't know what it actually stands for, but it only has the government bonds, sovereign bonds, which are backed by the government under it. So these funds are safe, but they are quite volatile. But in the longer term of 3 to 5 years, they are excellent to keep. Similarly, there is a credit risk fund. Credit risk is basically corporate bond and credit risk are similar types. So these also are good to keep for a longer term. But if suppose you say that if I want to take any, if I want to have any fund which I can keep for 3 years. So in this particular case, at this particular time, you have this long duration funds. And always when you go for the debt funds for keeping for a longer term, in lieu of your FDs, like instead of having an FD, you would like to have these, it is important to go for the debt funds of known fund houses like Aditya Birla, like DSP, like Franklin, or HDFC, ICICI, SBI, which each fund, each scheme should have a substantial AUM. And also you should go by the rating you will discover in value research. It says the rating, average rating of the funds, which it is there, and which I told you last time that should be AAA or AA plus. So these assure you that the fund is good, and there will be no credit risk on that. I mean, credit default on that. The money will be returned to the fund house from the person who was taking the loan and all that. So you should use that. So a combination of these funds, you can have two debt funds in the same AMC also. One for your SIPs, STPs, and one for your as a proxy for your NRE FD. We have already discussed why NRE FDs need to be had for this, and the reason is because when you suppose by accidentally we do come across in our long career that we become resident, we lose our status, and we lose it for 2 years. So in that case, your interest from your NRE FD will become taxable, and If you have suddenly given up sailing or you've taken up a shore job here and given up sailing, then all your NFDs will have to be converted to a resident FD. And from there, it's a straight downfall. Firstly, the inflation of 4 to 5 or 6%, and of course, the presumptive tax accrual which you have to be paid every year. On the contrary, the taxation for the debt funds is only at the time of redemption. So this will stay. This strategy has worked very well for a lot of people who have understood it and don't go by the daily fluctuations, because the way the debt funds fluctuate is very less, but people tend to think. So this thing, not like equity market, is different. Going back to my question, my point when I said when I started the webinar, that the economy of a country works on debt. It does not work on equity, because to run the business, to continue the business, to expand the business, to scale up the business, you require money. So for this, some companies they bring out follow-on public offers like the IPO, and they say this money will be used for our future expansion, growth, acquisition of another companies. But essentially, if you need this money as a company, you will need to approach somebody. Either you'll have to approach a bank. So with a bank, it is a long drawn process. They have to agree about it, and the permission has to come, and things have to sort it out. Sometimes the companies take this debt from foreign markets. Earlier, there was a huge arbitrage. There is an interest rate difference between India and US and Europe also. So there was a difference between our LIBOR rate and the FCNR rate. So what these companies or individuals used to do is they used to take loan from US or UK and used to park the money in India in FCNR, because the Indian FCNR rate was much higher than the LIBOR. LIBOR is London Interbank exchange rate or offer rate, something like that. So that used to happen. Now it has gone away. That arbitrage thing is not there. So when these companies they need money, they go to the banks, they go to other people, but largely they will have to, nowadays they come to these AMCs, and they say, let's say for a case of I need money for 2 days. I need 3,000 crore for 2 days, maybe to pay off my some supplier or somebody. So they will go, and what this fellow will do is he will give the money from the overnight market, overnight fund. So we have each AMC, few AMCs have an overnight fund also. Now, if you see this overnight fund from a 1 day of 0.02, from 1 day of 0.02, and year to date yield of 4.73, year to date return, we are only in the 9th month. They have a 10-year return of about 5.61%. This is a category return. So they will go to them. Now suppose somebody needs money for about a week to a month. Then he might go to the same AMC, and the AMC person, they may give them money from the scheme of, by taking the papers, they will give it from the scheme of money market fund or liquid fund. So because all these schemes, they are termed under the papers, under the maturity of the papers which they are holding. Nothing to do with you. Just because you want to keep your money for a short time does not mean you cannot keep it in a long duration fund. You can keep it. Just because you want to keep money for a long time doesn't mean you can't keep it in the liquid fund. I have kept it. It doesn't matter. Returns in the debt funds are varying just about 0.5%, and you should never select a debt fund by its returns. You have to select it first by the safety of its papers, by the pedigree of the company, AMC that you are investing your debt, taking your debt portion to. So it all depends on that. Do not go for by the returns to a company which has a very less corpus and is quite new in the market. In the debt category, that can be disastrous. It can happen even with the well-established companies, like I discussed about the case of Franklin India in 2020 March, when Idea and Vodafone Idea, they could not pay back the debentures that they took from Franklin India. So it was quite a sad thing, and there were 6 schemes which had a quite a huge exposure to Voda and two other companies. I think one was Bhushan Steel or one was Diwan Housing, something like that. So it was a serious thing, but because Franklin India is a very reputed company and it has a long presence in India, so they stopped these six funds from selling or buying fresh. They just kept them isolated. They got slowly all the money back from their creditors, because at the end of the day, it is same, getting money back from the people who owe it. And despite that time being of the lockdown, they did a marvelous job. They returned everybody's money within reasonable time and with a certain amount of appreciation also. But earlier, I myself was exposed to one of these companies called Ultra Short Term, because also selected and I wanted to take a kind of a risk. And when others were giving about 7% return, they were giving about 9.4% return. But in the final game, yes, that was wrong, and we should avoid that kind of exposure in future, right? We have, if you will look in valueresearchonline.com/funds, and you come down the category, then you will see this list of equity funds and below that debt funds. And this is only to understand. When you will further click on, it will give you explore into each and every AMC. So when you suppose we go to this, let's take the simplest case of a long duration fund. When you will open this, you will have all the schemes which are available with this long term. There are not many. In the long duration category, we only have 7 schemes. So on the front page, if you will go, it will show you ratings, and it clearly shows unrated. And why they are showing unrated, I cannot understand. But they have their own methods. Sometimes they say that if they have less than 3 companies in a particular category, less than 6 companies in a particular category, then they don't award ratings. Then is the return, of course, then riskometer. So in this, all the risks are moderate types, and category is long term debt, and VR value research says avoidable. Now this is a little unfair, because on an interview, he has himself said that Dhirendra Kumar has said that it is a good thing to have your money, part of your money, in these kind of funds, right? Next is expense ratio, which actually goes from 0.24 to 0.43. And in this, what is important to see is that the oldest company is actually ICICI, and ICICI long-term duration. And in this, we are basically seeing the direct. You see this thing, in the regular mode. Then ICICI True Long Term is a 26-year-old fund. And below this, less than that, HDFC long duration is only 1 year old. But still, ICICI long term does not have even 1/5 of the net asset under management as compared to HDFC. So that shows, and one of the famous ones which I have discussed with you is Nippon India Nivesh Lakshya. This is also regular, and it has completed about 6 years so far, and it has a AUM of 8351. So I will not discuss the return part, because that is quite evident and you can always select it. But these are the kind of options that you have. And by making a good mix and match, you can actually get a decent single digit return over a long period of time. So this is what I had to tell you, that you can think of these also. And certainly the top 4 ranks who have substantial salary and who have reached a certain corpus in the equity segment can look at them at maximizing and optimizing your wealth in general. You can, even if you do not have a sufficient portfolio in equity, still you can keep your money here and try out. It's all about personal experience, and you can try out. Initially start with 50,000, 1 lakh, 5 lakh, 10 lakhs, and see how it grows. I do not find it very difficult at my stage to, even before that I would move my funds for the sake of experience into one or the other, and taking a call on what I would think would happen in future. So this is what my suggestion would be to you. And now we can discuss something that you want to ask.
Sir,
As I
please
said,
elaborate about that Nivesh fund.
Yeah, the name is Nippon India Nivesh Lakshya regular. I discussed about the regular part, and it has a alpha of 10. That means it can generate 10 points more alpha than the market. So in this evaluation, you also have a risk category in which your fund is discussed on the basis of six parameters. That is R squared, alpha, beta, Sortino ratio, Sharpe's ratio, standard deviation. As you move on, you will realize that there are other things that you can learn about them also. But otherwise, you can just simply select and return. In my opinion, the long-term fund will give you a good double-digit return in the next. Could give you. I have also already put my small amount in this category. And let's see how it works out.
so this long duration fund, there is no lock-in period, right?
Exit load. No, not really. In Nippon Lakshya you have, and it says 30 days and 90 days. Your exit load is you are only locked for 30 days in Nippon India, and SBI long duration is 90 days. In others, there is no lock-in. And none of the debt funds otherwise have any lock-in. Some of them may be having for 1 week or something, but nothing much. Is anybody else? Anything else? Even unconnected? Any questions? There are few names I'm seeing first time. Yes, Arjun? Hello. Arjun, can you hear me? Captain Arjun. Okay, anybody else? Nobody? Yes, Shami?
Yeah, hi sir. Good evening.
Good evening.
Sir, just wanted to know regarding the Parag Parik DAF fund.
Mhm.
Actually, I'm not in touch on our Telegram channel of late, so it's been a time because I was away. So just wanted to know whether it will be taken in a debt category or equity, because
Which one?
I guess Parag Parik Dynamic Asset Allocation Fund.
Parik. Actually, it will be in a hybrid category.
Okay.
Will be in a hybrid category. And
Okay.
I'll do a little, let me just check it out also.
Yeah.
The
I
best
think their
way,
equity exposure is less than 35%. That categorize it as a debt fund, but I'm still not sure
yeah,
because as per
yeah.
RBI, I
It is a
guess.
hybrid.
Yeah.
Even hybrid, it has a lot of formats. It has a
Okay.
conservative hybrid fund also, and it has a
Yes.
hybrid dynamic asset allocation. So it is in
Yes, sir.
dynamic asset allocation. So it is a hybrid fund. It is not a debt or something. And as because the government of India is used to, they have
Yeah.
made some special kind of a taxation for this
Right.
category, which we'll come to know very
Right.
soon.
Right.
ठीक है ना?
So given the market scenario with the equity so high, would you suggest investing in conservative hybrid and this dynamic asset allocation, sir, at this time?
देखो यार, मेरा क्या है ना, मुझे मुझे कंजर्वेटिव चीजें पसंद नहीं आती हैं।
Okay.
क्योंकि देखो, अगर कंजर्वेटिव की बात कर रहे हैं तो देन व्हाट्स रॉन्ग विद द एनआरईएफटी? It is tax
Yeah.
free, it's giving you
Correct.
7%, lock in for next 7 years, or the maximum term that the bank is giving,
Correct,
accepting.
sir. Correct. I agree. But only problem with the NRE FDs is if you go for long term equities, they give you 7%. But then again, if you are not selling for 10 years or so, then it becomes taxable after you attain the NRE. I mean,
Yeah,
you attain a
but
resident status.
you have you are only keeping a view of a very short term, that the way the market is risky now. That is what you are saying.
Yeah. Yeah.
As per me, the market is never risky. The
Mm-hmm.
market is never overvalued. That is my personal belief.
Right.
I feel as long as we are earning, the market can never be expensive. If it cannot be expensive for the foreigners, why it should be expensive for us? when you are also earning in dollars, suppose you have already invested and you are about 3 crores in equity, and tomorrow the market tanks 10%, suppose, let's say 10%, or you want to make it 20? Fine,
Right.
make it 20.
Right.
20% of 3 crores is 60 lakhs.
60 lakhs. Yeah.
That means your net portfolio has gone down to 2.4 lakhs. This is a theoretical calculation.
Yeah.
Actually, it will
Yeah.
not be so.
Yeah.
So
छह
Yeah.
at
बजे
this
जाओ ना
stage,
तेरे को 6 बजे
what
जा
would you like to do? You think your debt, your dynamic allocation, or a hybrid fund will fall less? Fine, it might fall less, and your level from 2.4 might be 2.6. For me, 40 lakhs lost is as good as 60 lakhs lost, right?
Right.
From my point of view, and it is not lost till you have sold it.
Yeah.
So what I would rather have it that you have your money ready in your debt funds, and if that same scenario, like I just discussed a few minutes ago, if that scenario happens and the market goes down, buy into equity.
Yeah. Yeah. I understand.
Why I don't like hybrid equity funds or hybrid
Yeah.
funds is basically because we are not here for any conservative game. We are here to enhance our portfolio and take advantage of the situation. For this, you do not have to look outside you. You don't have to look outside you on the television or economic time.
हाँ विजय भाई हाँ। तो वो तो अभी चेंज किया था ना
I was there. Actually, I could not hear properly
Okay.
because my signal was not
Yeah.
correct.
So, now you see, my point is that by selling equity and coming into debt, you are already 14% down by paying capital gains.
Yeah. Correct.
अच्छा
Correct.
अच्छा तो अभी क्या कर
You have from your capital, from your gains, I'm not saying the whole
Yeah.
तो
thing,
क्या
but
चालू
suppose you
रहेगा
want to
उसमें
shift even 10 lakhs from there, that means
Yeah.
out of 10 lakhs, 1,40,000 तो आपने गवर्नमेंट को दे दिया बिना कुछ करे.
बिना कुछ
तो
किए.
पहले तो
Correct.
आप ये
Correct.
1,40,000 पहले तो आप उसको कवर करोगे. वो
Correct.
डेट में
Correct.
जाके कितने दिन में कवर होगा नहीं
तो
होगा.
तुम कितना में
कुछ
दे
नहीं
रहे हो
करना है. अगर if you are feeling so good, so like about the market, next
Yeah.
salary which comes,
Yeah.
don't invest
उससे
it
ही कर
in
सकते थे
equity
पहले
that much.
Equity. Yeah, that's what I'm
Put it in
doing.
debt.
Correct. Correct. That's what I have
But
cash. I'm
frankly,
drawing cash in
but
debt only.
frankly, I am retired. I don't have any source of income except my
ठीक है तो करो फिर उसको कभी करके दोगे
investments. It is 76/24.
Okay.
77/23.
Okay.
So there is no issue. You see, that's what I'm saying. You have
Okay.
to be strong in your head.
कुरला वाले दे दो
You
Yeah.
have
Yeah.
to be
Correct.
vigilant and aware in your head
हाँ
that I am okay.
Yeah.
And
Okay.
if today the market has come down from whatever level, I don't even know the Nifty level today or yesterday. I only go day to day basis that how much it has gone up or how much it has come down. So it doesn't matter if tomorrow the Nifty level comes down also, you know that you are earning.
Yeah.
And if you are the type who gets scared or there's a fear or you want to be cautious, let's not call it fear or scared, let's say be cautious. You put your money in debt funds.
Yeah.
If you feel good about it, that no, this market is very good, then whatever you earn for the next month, put it in equity. Don't put it in debt at all. So going from debt to equity is perfectly all right because you are buying something by going into the time machine. You are buying something at yesterday's level or day before yesterday's level.
Yeah.
If you can catch them. The way the mutual funds are happening nowadays, I don't even know that if you can catch them or not because sometimes they give you a NAV of past.
Yes.
3 days past. There has been a case when somebody has been given 3 days
Yes.
ago. And
Yes.
sometimes
Yes.
they'll give you 2 days late. So we don't
Yeah.
know.
Yes. Yes.
And the things are becoming so heated up and complicated that we can't even fight with these AMCs.
True.
So best is to keep two formats. One format is of systematically investing, and second is of a windfall that sometimes you have money and the market is down. This will not happen many times. This will happen maybe 2 or 3 times in your entire lifetime. Believe me,
Right.
it doesn't happen every day. So
Right.
in that time, if you take the advantage, like in Julius Caesar, there's a scene where they say that there are tides in the Cassius says that there are tides in the affairs of men which if taken advantage of leads to gains. Now this was a book written so many years ago, and this is
Yeah.
exactly what we are in for. So
Mm-hmm.
don't think of selling your equities and moving here. Use
Yes.
your future income, which is coming next month,
Correct.
to decide
Correct.
where I will put this.
Correct, sir. Correct. But I'm actually, you see, you are 77-23. You are pretty comfortable with the equity, so much 77% of your equity portfolio. But I actually see then what is the good allocation, asset allocation for given I am 46 now. So for that age
No,
is
no, not the
so
age.
is the, yeah,
What is your total portfolio size?
yeah, about,
That
yeah,
decides.
correct, yeah, okay,
That will decide. If you are
okay.
happy with it, see. If you're happy with it, if
Mm.
your portfolio size is about something which I suggest for retirement in the region of 4.5 to 5,
Yeah,
you don't even have to worry about. You should have 80% equity exposure.
yeah, okay,
If
okay,
you have
understood.
somebody just sent me, he's always nine crores.
Yeah,
I just got the figures 2 days ago. So
yeah,
9
okay.
crores, you do not need to have 25% because uh, see that much of money in
Mm.
a debt format is a lot of money
Right.
and a lot of opportunity costs. So just keep a figure of 2.5 maximum in a debt fund
Okay.
and let everything remaining be in the equity fund.
Okay.
And then you suppose you give up. You're 46, you give up after 2 years, and
Mm.
your portfolio is about 8
Mm.
and only 2.5 in debt, and you find the market is going up. So what
Mm.
do? You start taking out from equity funds,
Three equities, yeah, correct.
right? So you
Mm-hmm.
automatically after 1 year your asset allocation will come down. Asset
Correct.
allocation is basically to make us feel comfortable.
Yeah, right,
There is
sir.
no figure which is right or wrong.
Yeah, correct.
I could actually go 90% and be happy because I don't have any dependents now. I could even
Mm-hmm.
go up to 90% in equity. But just to be on the safer side, because you don't know what can happen. In a good time, people tend to think of themselves like, they are the best investors and all that. But it is nobody is a good investor, nobody is a bad investor. The
Right.
market decides everybody's fate. One must never get arrogant. One must never blow one's trumpet in the 3 o'clock tea time in the engine room or on the bridge. सब
Correct.
बराबर हो जाता है यहाँ पे. One small
Right.
mistake can level everything. And
Yeah,
now,
understood.
in our case, in our life, now there are so many scams which are happening, so many things which are happening. So apart from the standard investment risks which were there are all these things which are also there.
Yeah,
Right?
correct. Correct, sir.
So don't worry about all that. And whenever you have to take such decisions, it helps
Yeah.
to have your wife on your side. If she has been
Okay.
there in the investment journey, if you
Yes, yes.
because it is a case of three people deciding that. When two people are thinking in a place, this is actually equivalent to three people discussing something. Three
Right.
heads.
Yeah.
So always discuss that, and you will sign. Then your wife will tell you why. Why do you need to give money? Why do you give money? Let it be
Right.
there. So before now moving from equity to debt, I don't think this is a very good idea. A lot of
Okay.
people say that why don't we go to a hybrid equity fund? They will take the decision. I said, what is the point? If in one hybrid fund my exposure becomes tomorrow to 1 CR and the market falls, and if I was in completely in equity funds and debt funds, then it would have fallen by 20%. In hybrid fund, it will fall 16, 17%. इससे ज़्यादा क्या गिरे? So what is the big consolation for me? It has fallen all right.
Understand. So one more thing, sir. Sorry, I'm taking too much time. Actually, I'm pruning my real estate because I had a lot of investment in real estate also, and I'm selling it off. So with the new cash coming in, so as you suggested that, okay, given how much, yeah, around 2.5 CR is enough for keeping in debt. I have not reached there yet. So I will start deploying there to debt from real estate, whatever the cash I'll be getting. And I once I reach that, then I start getting into equities given the scenario at that time. So this is how we should go, or I start deploying both ways, equities and debt together.
Both ways.
Okay.
What you do is, when you sell this, firstly try to get the maximum in your right, because that is what actually
Yes,
matters.
yes, that's what I'm
After
thinking.
that,
Yeah.
whatever you have, put it in the debt funds of all the AMCs that you have. Say you have six, seven AMCs. Put equal amount in all the AMCs. I'm telling you what I
Okay.
did 4 years ago, 4.5 years ago. Put in
Okay.
all of them and set
Okay.
up a small amount of STP in all the equity funds that you have.
Okay. Okay.
You are already earning something,
Yes.
exponential
Yes.
come. This
Yes.
fund which will be there, so you are not going to be taken off guard at any given time.
Understand.
And always go back to the objective of why you started equity investment when you started equity investment. Always remember that. You started equity investment to make a good portfolio towards your retirement or towards your goals when they are about to be reached. Children's
Right.
education, maybe a daughter's marriage. I never talk about
Yes.
son's marriage. Huh? I always
Yeah.
talk about daughter's marriage.
Yeah.
Or their higher education abroad, or you decide at a very fine age like me too that you should have one more house. Doesn't matter. There's no crime. It's your money. You decided. So you can sell one, you can buy another. So all that when you decide, the idea
Yeah.
is that we should grow towards that. So
Right.
by taking intermediate decisions of going to a conservative form of investing is not a good idea. Keep
Understood.
changing your goals in between, your format of investing in between. Never
Okay.
be never be greedy. I
Yeah.
agree with that and I support that. Never be
Right.
fearful also. I also support that. Most of the quotations, most of the books that you read in the market, you read in the your letterbox or your WhatsApp box every day, they are all written for direct stocks. For a mutual fund investor, it is a very drab life. It is a very boring life where you only invest and you do nothing. And when
Right.
you stop investing also, then also you don't do anything except watching it
Yeah.
grow. That's all.
Right. 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 Thank you, sir. Thank you so much. Yeah. Thank you. Really appreciate it. Thank you.
Anybody else, sir? Yes, Praveen. Yeah, Praveen जी बताइए.
Sir, good evening, sir.
हाँ जी. Good evening.
Sir, I was the one who asked yesterday after seeing this Shankarnath's debt fund videos. Range of in range of returns from debt funds are between 6 to 8.
Yeah.
What age does it gives more than FD? I was the one who asked that question. Then
So have you been able to get the reply so far or not? You've been here since the beginning, right?
no, sir, I've been here since start. I've been listening to you. I've been saying that debt funds only when we redeem it, we are subjected to tax. But in the case of FDs, like on a year basis, will be subjected to tax.
Okay, Praveen, what's your rank?
I've just done one saving as 4E.
Okay. So you see, you just done as a trainee, you said, huh?
Yeah, after training, I have first time sailed as 4E. I'm on vacation now. I have signed off the last month.
So right. So you see now the thing is that you are at the beginning of your career, right?
Yes, sir.
And I
Yes,
believe
yes.
you don't have too many responsibilities also,
Yes, sir.
right? You don't.
Yes.
Okay. And you don't have many liabilities like any loans or something going on being, no?
I have one education loan. Almost I'm about to finish it.
Yes, you that you wrote that. So anyway, so you'll see we never advise here that do not have a NREFT. We never say that you should not have a NPS. I
Okay.
never personally never advise that you should be against anything except your ULIPs, your endowment policies, or money back policies issued by LIC or any other private sector insurance company.
Yes.
Those are the only things that I say you should not have. You can try
Yes.
everything. And as you have been discussing, listening to other people talking about in great detail about debt funds, the debt funds are actually in addition to your NREFT. You should have
Okay.
NREFT, you have just started earning, but
Yes.
remember that you have your exams also coming forward, so I can't tell you to have a greater exposure to equity also. But nonetheless, you should start investing in equity.
Yes, sir.
At least at your stage, you can have 3 to 4 funds,
Yes.
one flexi cap, one multi cap, one small cap, one value fund, right? Right now,
Okay.
2 years ago, I used to also say a foreign fund, but right now I would resist from that.
Okay.
The minimum amount that you should invest in equity is about 35% of your annual salary. Let's say your annual salary is 4,000 into 7, $28,000, right?
Yes, sir.
9,000 at least you should be investing. This will also take care in case you need some money when you are appearing for your exams. And this should
Yes.
continue. Why I said down the year is because whatever is your total, you should divide this in 12 and you should keep investing it down the year, every month. Uh,
Okay.
It does not matter whether it gains or not. But in case you need this money during your exams, even if the market is down, you will be able to remove this money, maybe losing a little bit, but the money is there safe. If you do not
Okay.
need that money will continue to grow there every night, every day.
Okay.
Okay? Any money that you need, but you do not know whether to keep it in your NREFD or elsewhere, what do you do with that? Will you keep the 65 because you have only given 35% to equity? What about the
Yes.
65% which happened? Where are you going to keep that?
Yes.
NREFD?
Yes.
But if you keep in NREFD, you cannot take it out before 1 year. You will lose the interest.
Yes. Yes. Yes.
If you will keep in your NRE savings, you will get 2.5%. You
Yes,
want to
sir.
keep there?
No.
No. So the next best step is the debt funds. Keep little money in your FD and your NRE savings account, but keep the otherwise the money in your debt funds because they will give you a better return. And suppose by some chance you're not able to complete your NRI status, at least it will not be subject to the tax immediately. You get
Understood.
the point. So you keep money, keep it split between one FD because you don't have too much money right now. And I think next after next shift you'll be getting down again for exams. Right?
Yes.
So don't think about just the returns. The returns, net returns are always more in your debt funds. And this
Understood.
cycle is a rolling cycle. Don't consider it of it as a linear where you can say, see, it could have been more if it was in the bank, but debt fund it was like this. No, it was like this because you are having an opportunity cost along with that also by when you keep your some money in your NREFT. At your stage, money is important to you. It is very important to have it, but it is also important that it grows in the right way. That's the
Understood.
point. So that is why whenever you are having your NRI mutual fund equity investment in the same AMC, try to keep some money in the debt fund so that your STP continues. And whenever you need, you can take out little bit or entire debt fund for your use during your vacations or leave or exams or whatever. Is that
Understood,
understood?
sir. Understood.
Perfectly all right. It works proportionately here. The debt market, I have repeatedly told people, it also works on Sundays and Saturdays and public holidays. The only thing is it is not seen by everybody, but it is available. It grows every day. Not like equity market, which is traded only 5 days a week.
Understood, sir.
If somebody, if some corporate needs the money on Saturday night, say it needs 600 crores, it comes at a great premium. And I somehow missed out telling you in the last week. I think this last Monday or something, the returns on the debt funds, like I told you in the last meeting, were equal to the returns on equity funds in one night.
Understood.
Okay? Yes.
Actually, I
Okay.
started my first
Yeah.
investment in Paragpari Flexi Cap.
Perfectly all right.
Actually, it was
Yes,
suggested by you only. So,
yeah.
in this vacation, I was planning to start a new fund also. So, is there any
You can
suggestions
take one
from
more.
you, sir?
Yeah, you can take one more flexi cap, or you can take one more multi cap fund also from HDFC or Franklin
Okay.
or DSP. You can take any of those. It's good. Right?
Okay. Thank you, sir.
And take one debt fund accordingly there in that IMC. Yes, Arjun.
Okay.
Good evening, sir. Good evening. Actually, my signal has been coming and going, coming and going,
You have
and
shown raising your hand for a long time, but
sir, thank you, sir. Thank you for guiding us all. And first of all, that NRI versus debt funds was very clearly and nicely explained. Thank you very much, sir. Only one small question now. In these high markets, shall we continue with our the SIPs that we are continuing, or can we reduce the amounts on the SIPs?
no. Don't reduce anything. Don't reduce anything. This market has continued on its high trend right from 23rd of May 2020. वो बढ़ ही
Okay,
रहा है.
sir. ठीक है सर.
Whatever people removed the money from 24th of March 2020 till that date, they have been waiting till date to market to fall or correct and so that they can put the money, but it has not corrected. I am not saying it will remain high or will continue to grow, but the point is we cannot take that chance. Because practically we have seen that when SIPs or STPs are stopped once, even if the market stops, only 20 to 30% of the people actually are able to start them back. It takes some years for it to start. So suppose the market drops 10% tomorrow and you have already stopped a SIP or STP. When will you restart?
Okay, okay, sir. So let it
Don't
continue.
stop
No
for
need
it.
to reduce.
Yes. No,
No
absolutely
need to
not.
reduce.
Only thing is that maybe because you are a very old investor, so I will only suggest that if you have not done it, you can do now by staggering your investment in SIP or STP in all days of the month. Like suppose you are having six STPs, so do them on first, sixth, one SIP on first, another on sixth, another on 10th, 15th, like that, so that you are able to get some units of mutual fund at all price points.
Already doing it, sir. You suggested it last few years back. Already doing it.
So that's the best thing,
So,
right? You don't have to
so
worry about the
that's
market going down or up and up down. The market is good for everything. As long as you're earning, keep investing. When you are about to stop earning, just stop there. And when you stop earning, keep taking it out like the way you invested. That's all. That's all.
okay, sir. Thanks a lot, sir. Thank you. And sir, one small. Actually, this is. This question should I should answer this question myself long back, but this question I want you to answer. Like you have a similar fund. Now you have a large cap fund whose NAV is very high, and there is a similar fund whose NAV is less. Maybe just comparing a ICIC blue chip fund or a HDFC top 100 fund. Which one to go better? Maybe when you are comparing two AMCs with only the NAV part of it, because you end up buying more units when you are buying the same kind of a fund, right?
Yeah, actually, as you were asking the question, I was also thinking the same thing that how would I be comparing? Because this is exactly the thing that we have done the previous time. Now, you see, if these two funds were formed or they started off in the same time, like HDFC Top 100 was one of the older funds which started off in 1995, but Blue Chip, I think, started off in about 2006 or 7, right? So their NAV will decide if suppose there were similar funds. Let's take the example of not this, but let's take the example of HDFC Equity Fund and a Nippon Growth Fund. They came out in the same year. Now HDFC Equity Fund is also a stellar fund which has given a return of about 22% every year for the last 29 years. Now let's take Nippo Growth Fund, which was earlier called Reliance Growth Fund, and it has a NAV of 4,800 rupees, right? So it is automatically clear that both of them started off with the same level, but today Nippon Growth has taken it over. So the today Nippon Growth is the most expensive NAV in the Indian market. I think so. There is nothing more than that. But still, if I have to buy a mid-cap fund today, I will only go for Nippon Growth and nobody else. Why? Because it has the expertise, it has the experience to back it, and it is continuing the same growth what it showed about 15 years ago. So I will not go by the NAV, I will go by the pedigree of the fund house first, the pedigree and familiarity of the fund manager to be second, and how they have been performing in the greater past and the recent past. Part one.
Okay.
Part because you gave the example of large caps. So let me just specifically deal with large caps. That today, if you need to start the large cap, it is not advisable to go for active funds. It is advisable to go for passive funds. And in that view, you can opt for Nifty 50, next Nifty, or you can even opt for Nifty 100. To hell with it.
Okay.
We're okay.
Yes, yes. And sir, this the next question. I mean, this has already been answered by you, but this I want to confirm only one thing concerning the taxation part. Like, if you are having a NRE FD versus debt fund, and you are sure you can keep it for 1 year, the NRE FD, and now you have to withdraw debt fund after 1 year, NRE FD after 1 year. So, I mean, concerning the tax part, which will be the better, NRE FD?
NREFD is tax free, right?
Yeah, that is correct. So, if you
So it
even
will
get
be
maybe in a
much
debt fund, you,
better.
yeah, NRE FD will be much better, right?
Yes, because it is already
If,
predicted that it will give you so much return, and if you are a non-resident, it will be tax free for you. So it will certainly
and
be about 9.5%. The
yeah,
debt
yeah,
fund maybe 12%, but we can't be sure. It is.
yeah.
I am sure
So,
of my experience that it is, but I am a resident. You people are non-residents.
yes, sir. So, if you can hold that money for a year, so NRE deposit always becomes better than
Perfectly. Yes.
debt fund.
Yes.
And when you are planning to leave sailing or you want
Yes.
to,
Then slowly,
I
slowly you
mean,
should
shift
come
back
into this, come into the debt category. Yes.
debt fund. ठीक है sir. So then I am going right, sir. Thanks for your all your sir guidance throughout so many
And
years, sir. Thank
do
you very
keep
much.
consulting your CA also, because when you have this amount of FDs, then you should also consult with him going by the prevalent tax laws. It is possible by the time you retire, these tax laws would have again changed. So maybe
Okay,
you
sir.
could push your level of having NRE FDs from 75 to 1 crore probably at that time. So just be careful what they say that time. Let's
Thank
listen
you.
to Mr. Anshuman. Yeah. Okay.
Thank you, sir. Have a nice day, sir. Have a nice day. Thank you very much, sir.
Yeah, Anshuman.
Hello, sir. I am from Dehradun.
Mm-hmm.
So my question is in relation to the real estate market over here in Dehradun, and how shall we allocate it in our portfolio? I mean, we should shift it from, of course, from the debt funds. Can we invest in the real estate, or shall we directly invest from the cash flow coming in?
Your
And
question
would
is
you
very
recommend
clear.
it? Yeah.
Your question is very clear that you want the real estate for investment.
Yes. Yes.
So I have people who have been with me and all that. They know very well that I am not for real estate as investment.
Yes.
That is very sure.
Yes.
Secondly, it is very difficult in Dehradun today to find real estate
Correct.
which has a clear title.
Okay.
Right. If at all you will have to invest, you will have to go for built projects and not land. Land already had its problems, and I always say that the titles are not clear, and Dehradun is a city of mess today
Correct.
as far as real estate goes. So, if you already have a house which you are satisfied with, your family, your extended family, including your parents, are satisfied with, then I would suggest keep it at that.
Okay.
If you do not have a house, then please, this I have said in all the 6 seminars that I did, physical seminars in Dehradun, that even if you have to buy your house on the top of clock tower, buy it, however expensive it may be. If you need it, buy it. But otherwise, for the sake of investment, no. No real estate in a longer period of time has ever outperformed the equity market. So do not think about investing there. You will never get sufficient returns. The returns from residential sector across the country, including Nariman Point, have never exceeded 2.5% in the residential sector. I mean, whatever you spend, the rent which you will get will not be more than 2.5%. We have not included the property tax in that. We have not included the maintenance in this. Nothing.
Okay. Very clear.
And if you will keep growing your equity, you will always have surplus money to buy real estate where you want, not only in Dehradun, probably in Paris also. You will always have more money to buy real estate where you want. You can be assured of that. I am telling you that.
Okay, sir. Thank you so much.
Okay, Lokesh.
Sir, good evening. Sir, just few basic questions. Like, in my mind, it's like that ki the NRE FDs, I should keep it as an emergency fund. Am I right or wrong?
No. NRE FDs, why should they be kept as emergency fund? They should be kept as proper investment avenues in the fixed income category, where the return is certain, the taxability is certain as long as you are a non-resident Indian. So you can put any nameplate to it, emergency fund or this fund, but if an emergency fund is required and it is required at a very short notice, it is much easier to get it from the debt funds out. Right.
Right, sir.
And one thing which most of you have not probably looked at is that quite a few times you will not need money, that emergency money in form of cash. Emergency money will be required, in case of a medical emergency or something like that. So don't forget that there is always an overdraft also which you can take on these FDs. Nowadays you can take even a loan against securities. There is LAS in some banks which they offer you, which you can take against your debt funds or against your equity funds also if required. If you require it as a very top shot emergency and you have your credit cards, the credit cards also stand for your emergency fund. So don't worry about all that. Your debt funds are as safe for emergency purpose as your NRE FDs. And NRE FDs are not something you should shun. But at different stage of life and rank, you should allocate the appropriate amount. Keeping too less may make you a little insecure. Keeping too much may prevent you from investing the same money in your equity format. Because remember, I am only telling you to put minimum of 35% of your annual income in equity funds. I am not telling you the maximum amount. You can put as what you are comfortable with.
Correct, sir.
There are few members on the group who are not married even at the age of 40, 45. So they don't have much of responsibilities and they are investing almost 60% of the salary in equity,
Right.
mutual fund.
Okay, sir. Then I was wrong in my concept after listening this. So shall I right now increase substantially the NRE FD or go slowly to just to increase it? Because
What is
right
your
now I am a chief officer.
You are chief officer and you are about 32.
No, negative, sir. 40.
40. Okay, so you can, I would suggest that if you have a NRE FD in the range of 25 lakhs,
No, less than 20, sir.
less than 20.
18
So,
something.
are you on board right now?
No, I'm in city.
Okay. So, what you can do is, from the next salary which comes in, you can put a substantial amount to bring up your corpus to, let's say, 40 lakhs in your FD at one go, if you are not planning to leave in the near future. And the remaining, keep it where it is required and where you are allocating earlier. And slowly, after that, put 3, 4 lakhs every year, 5 lakhs every year to bring it to a maximum level of 75 lakhs. 75 lakhs is a figure to have in an NREFT. And I'm assuming also that if you are married, you have a PPF account for your wives in which you can put. In case you have a daughter, you are having a Sukanya also, and there also you putting one.
Like daughter and wife, both I'm putting this PPF full amount, and for my daughter I'm putting Sukanya also.
Perfect. So that's about 3 lakhs going there. So at least the amount that you have in the wife.
4.5.
No, you can't have 1.5 for your daughter then, because your PPF must have been in the name of your, under guidance of your wife. So together with your daughter and wife, you can only put 1.5 lakhs.
Okay. But what I am having, like my wife is putting 1.5 in each PPF.
No, you cannot do that. If the PPF is
I will clarify with that.
then total should be 1.5, but she can have 1.5 in Sukanya. And I'm not sure if that includes PPF, but I think she can certainly have 1.5 in Sukanya.
That I will recheck, sir. Yes, sir. And secondly, sir, is it wise to do the investment with the consultants or some other person, or it should be done directly by us?
It just depends. If you are already on your path of investment and you're doing it well, and you have achieved even, let's say, 20% of your corpus, that means you're already in the knowledge of things. So it might be okay, all right, to have your portfolio reviewed by somebody, like Equity Master has a plan, or you might find somebody one-time payment, who can review the plan. Or if you think you're good enough, you can do it on your own also. I mean, we never had the professional these advisors earlier, so we can do it on our own also. So you see, if you're all right, you have the right kind of funds, performing okay, you can check each and every fund. The resources are available online. All you need to do is just go for the paid version of these online services like Value Research or Prime Investor, and you can do it on your own. You're already investing on your own, isn't it?
Right.
Are you investing on your own or through a distributor?
Just last. Yeah, I'm both. Sometimes mostly I'm doing with the this investor planner, but sometimes I do small things with my own. But major I'm doing.
That's a good way to. That's a good way to learn.
Consultation of them.
That means good. I mean, you're learning at the same time.
Yes. And secondly, just with this real estate investment, I have a doubt that shall I consider land investment as a wise real estate investment rather than going for flats or property, something other than like that?
See, from here, I have to give my point of view, and I have already given that my point of view to Anshuman just a while ago, that I don't consider real estate good for investment. It involves a lot of hassles, and I have personally got the wrong side more than the right side. So I don't really believe in spending so much money today, because real estate in India is really expensive, and I don't really see it making money in the near future or even a distant future.
Okay, clear. Now it's clear. Like,
Vivek, just a moment, Anshuman. Vivek has raised his hand. Yeah.
Hello, good evening, sir. Thank you so much for so much insight on debt funds and all. One thing, sir, I have two distributors, and there are a lot of funds they have suggested, and I'm sure. So now I am not sure. As you said, that I should get it reviewed by the good distributor.
No, not distributor, not distributor. There are these people who are advisors. Like before, after I had started off with 2-3 funds with the help of my distributor in 2002. I took the help of Equity Master. They had this portfolio service. Now they are segregated in different ways. So they did a review for me, and then they suggested 2 more funds, and I went on with that. I don't see very much a need of a distributor unless, as long as we can understand our needs. See, what is our need? We should be very sure that when are we going to retire? Need number one. Before that retirement, what are the major expenses and when we will come across? See that also. Right. Correct. I mean, see, advisor will give you a lot of good talk. You say goal number 1, goal number 2, goal number 3, and all that. But for me, it has always been goal number 1 is always goal number 10. I want my money to grow. Why should I have one place my money should grow less and I put it in a dead fund, a useless fund, and where I want the money to grow faster, I put in a good fund. I want a combination of all funds so that my collective portfolio should keep moving. We say one should not have more than 75 lakhs in one fund. But what happens if you do? I mean, how many funds? You can just keep having a new fund and a better fund, and a different kind of funds will keep coming all the time. So we cannot be very fixated about that, and you have to plan your stuff. Learn to plan. If you can find a good advisor, which unfortunately are not too many. So I am unfortunately not able to help everybody as much as I would like to, because there are too many of us now here. So, but we can always discuss. This discussion weekly, which I have initiated, is for this purpose. You can see now, even now, there were 25 people. Last time there were 45 people. So, all of us come on a common platform and start giving ideas. I don't want you to listen. I want you to give me also your ideas. So that, we say, no, you forgot that. You should tell me. You forgot about that. So then I also correct myself. And maybe we can come to a solution right here instead of looking around for any expert.
Right, sir. So what I have done, right, sir, all the funds I have just kept it like that, whatever they had given me since 2017 onwards. And I have stopped regular investment since I have read your book in 2021. I had started direct investments myself or in some particular funds. I had shared you the funds. So those funds are growing up, and I had not touched the old investments which my distributors had given me. But with that, I had lot of funds. The portfolio has become so. The funds are plenty. The amount is also comparatively
The large number of funds, I saw that, yeah.
large number of funds. So, what should I do, sir? I mean, should I reduce the funds or
See,
let
the
them
only concern here is what you can do is you calculate how much are the funds, the ones which have been suggested by the distributor, so that you have a fair idea of how much are you paying out in commissions. Because the commission is paid on the entire amount.
Yeah. Correct. No, it's okay, sir. I mean, whenever I did not had any knowledge, they had invested my amount and that amount has grown up. So let them have a commission, not a problem.
No,
But
it is a issue because see, they helped you for a few years, but right now they have also got a fair share of it. There is no harm if you see that a sizable amount is going out as commission because I forget the amount what was there. But suppose the amount which is there invested through them was about 1 crore before and today it has become 3 crore. Your commissions are going out on 3 crores, not on 1 crore. And maybe if you were to sell these and come to the regular and to the direct mode, the commission would only be on about 2 crores. The capital gain would be 2 crores. You get the point. Because it has grown from 1 crore to 2 crores. Right. But then you could get out of that. So you have to decide for yourself, and if there is a way you can reduce those funds and incorporate that money into the existing fund which you are investing in the direct mode, you can do that. It will not happen in one day. It will take a lot of months to do.
correct.
Right?
Correct.
Right?
And one more thing, sir. Can you suggest a few good debt funds additionally in other than DSP Floater Fund and the Nippon India Nivesh Fund? These two funds.
I can do that. But my point is always that for what do you need this and which is your AMC? Because like I always say, each AMC that you are investing in the equity fund will also have this corresponding debt funds.
Correct.
Right. So you have to just see the rating of those funds, not exactly the star rating, but what are the kind of papers they hold, AAA plus or triple A or double A plus, whichever type. So then we will invest in them. And always try to invest in the same AMC where you are also investing in the equity funds. So that there is not again too much of a clutter. Because if you will again buy 6 more debt funds, it will again add to the clutter of the portfolio.
Correct. Right. Thank you, sir. Thank you.
All right, you're welcome. Now, Mr. Dheeraj is there, I think, in between. Anshu had raised his hand, I think he's there.
Good evening, sir.
Good.
Sir, I just want to ask you about debt fund. Should we invest debt fund from the mutual fund utility, like from NRE account? And if we withdraw this debt fund, then this LTCG will be applicable, right? So,
Firstly, you invest in the same way, the way you are investing in your equity funds.
okay.
On the same platform. There is no problem. Preferably in the same AMC where you have your equity funds. Unless, of course, that AMC does not have a good equity fund and only a good debt fund is there. Number one. Number two, the latest format of taxation for debt funds is out, but I am not sure what it is because it has changed every 6 months, 7 months. So I will tell you that, but I think there is nothing called a small short term, it's only long term. It will be applicable to it and it will be added to your income unless it is different. But the taxation will be there even if you go for a STP. But if your taxable income for that particular year is below the limit, you will always get the refund back.
Okay, so it will always exceed your NRE FD interest rate, right? but I'm comparing it with, because on NRFD we don't have tax, right? If we get
I cannot promise you that it will always be more, but I am sensing that in the near future, the returns from the debt funds, long term or even ultra short term or a gilt fund, will be higher. Because the definition of by which the debt funds grow and give the return is in that way that if the bank rates go down, the yield of the bonds go down and the returns go up. So it is not every time that it will happen, but presently in the next few months, it is expected to happen that way.
okay, sir. And one more question I want to ask you about Midcap Fund, because I'm looking for some Midcap funds. You suggested Nippon India, right? Nippon India Growth Fund.
Nippon India Growth Fund is a good active fund, and Nippon India 150 Nifty 150 mid fund index fund is also a good fund. Okay?
Okay,
Because
okay.
if you don't want to take the risk of having in the growth fund, then mid 150 is an index fund. Because people who are already having active fund, I'm suggesting to most of them to also start investing in the corresponding index funds.
Okay, sir. Okay.
Okay.
Thank you, sir.
Okay. Arjun. Okay. Yes, Arjun. Please go ahead.
Yes, sir. Yeah, good evening again. So like we have this Sukanya, this policy for the daughters. Do we have anything like for the sons, similar kind of a investment scheme? Just for the naughty sons, Just wanted to ask.
Just before 4 o'clock, we were in a restaurant because it is Daughters' Day today. So I asked my daughter, I said, why don't we have Sons' Day? So unfortunately, just like we don't have the Sons' Day, we also don't have schemes for the sons. So actually, this is all a very kind of a eyewash. Even this Sukanya scheme is not meant for us. I would rather have you put 1.5 lakhs in a pure equity fund, small cap type, put it every year for the next 18 years, and I think it will outperform the Sukanya scheme by 10 times or 15 times. But things are that we have all kind of members who want different kind of assurances, who have different kind of risk appetite, who have different requirements. So we say, okay, put 1.5 lakhs there also. I mean, as a master, you're earning 60 lakhs, 1.5 लाख वहां डाल दो यार, खुश रहो. तो वो उसके ऊपर में बेटी का नाम आता है, फोटोग्राफी, तो लोग खुश हो जाते हैं.
ठीक है. Also, sir, one more thing, sir. Taxation on the debt funds for the NREs is more, right? Like if you are in the taxable bracket, taxation for the NREs is more for the in the debt funds.
Taxation, no. Taxation is of debt funds or equity funds is same for resident and non-residents. Only the TDS differs. For a resident, there is no TDS. For an NRI, in everything there is a TDS, which of course you will get back in case you are below the tax bracket. Okay.
Okay, sir. Okay, sir.
Taxation सबका बराबर होता है, ऐसा ही होता है. Manish and Vivek,
Thank you
we
very
have
much,
a toss. Okay, let's take it with Manish now. Yes, please go ahead.
Yes, sir. I just wanted to ask that in Sukanya Samriddhi, I think we don't have tax on the redemption also. When we will redeem at the age of 21, there will not be any tax, I think.
भैया मैंने तो कभी लिया नहीं है, बट थोड़ा गूगल मार लो, मैं भी गूगल ही मारूंगा. ठीक है ना?
ठीक है सर, ठीक है.
ठीक. हाँ, okay, Vivek, you can answer me again. Hello, Vivek, your hand is up.
No, negative, sir. All questions answered. Thank you, sir.
All right. Anybody else? Nothing. Okay, so this is fine. And next time, if you can let me have some of your queries a few hours before, then I can keep it with myself. And this one says that tax benefit subject to a maximum cap of 1.5 lakhs. It is exempt from tax under Section 10 of the Income Tax Act. It is tax exempt.
Sukanya
Okay.
Sukanya
All right.
is exempted, sir.
Yes, please. Any payment received from an account that is time of maturity or in the nature of interest upon in accordance with Sukanya Samriddhi shall be exempt from tax under Section 10 bracket में 11A of the Income Tax Act. But please note, but this is as of today. Knowing our governments, what happens when this comes up for redemption later on, we don't know. All right. So thank you so much. Nice to have you and take care. Bye. Bye, Ankit. Takesh, you want to ask something? Bye then. See you next time.
Okay.
Goodbye. Goodbye.